Hey, this is Matt from InvestiQuant. Today is Monday, September 13, 2021. The markets have been weak since they opened today. So the markets gapped up sizably this morning. It was very similar to the gap that we had on Friday, which just rolled over from the get-go. That happened again today. We've made it back down to the prior day closing price, and we've stabilized a bit here so far. This is the S&P chart in the top left. You can see we gapped up this morning, dropped down to Friday's close, Friday's low area, and we have since kind of been consolidating here most of the afternoon. So it's not quite as weak as it was on Friday, but we are seeing lots of weakness again today. So let's take a look at what has happened historically when you get this directional type move to the downside as we approach the afternoon session. So I've got all four instruments selected there. The entry time is going to be based upon entering the market long at 3 p.m. Eastern time. For opening filters, we're simply going to say that it gapped up this morning, and then we're going to go into the post-open filters, and we're going to say that that gap filled, and that the open was near the highs of the day and the 3 p.m. price is near the lows of the day. So I'm going to do that by saying the open is in the top 25% of the intraday range, and I don't know where the close is going to be at, and the close is referencing this 3 p.m. price. I don't know where that's going to be, but I'm going to base this study upon it being in the bottom 25% of the intraday range. It is currently trading down there at the time of this recording. Next, I'm going to go into the indicators library and put us in a similar market environment, which is, oops, wrong button there, below a 10, but above a 200-day simple moving average. And now I can click view results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern time, exiting at 4:15 p.m. Eastern time, when you gap up and then you move directionally to the downside from that point. So we've got a gap up that has filled. The open was in the top 25% of the intraday range, and it is trading in the bottom 25% of the intraday range as of the time of entry, which is 3 p.m. here. And then this is taking place in a weak bullish market environment, which is defined as below a 10 but above a 200-day simple moving average. Historically, the S&P has 63 samples, the Nasdaq 88, the Dow 76, and the Russell 82. The win rates on these are fairly mixed. The S&P very neutral, the Nasdaq pretty neutral, the Dow favored, the Russell weak. So not seeing consensus on the win rates there. They are mixed. If we look at the average moves, the average loss is larger than the average win in all four of the instruments. So the S&P has a sizably larger average loss, as does the Nasdaq. The Dow, the average loss, a little bit larger than the average win. That's also the case there for the Russell as well. So win rates are not showing us much agreement on anything. It is mixed, but the average moves have been larger to the downside historically with this pattern. Price action is pretty rare today. You know, I was going to show a different study. I was more interested in a study based upon the sizable gap that had filled. But, you know, I started running a couple different scenarios, and it's so rare. There's just not very many samples to look at. One of the scenarios I was looking at was based upon the sizable gap filling within the first hour, and there was like 2 samples to look at. So we're in rare territory this afternoon. But hopefully you found this helpful. Good luck today. We'll see you next time.